Let's do live chat, and we'll go to YouTube on here. Sync that down. Your channel, and then live. Boom. Here I am. Okay. I am going to do my scans now. By the way, anybody not watching CNBC, it was basically 9/11 of today. There's not going to be a lot of scans that'll hit. Let's open up our notes. Nothing in the Dow Jones 30. Let's see if anything. I got to get this done before. Nothing in brokerage holdings. Tilray. I won't. Let's see. We're going to bring this all the way down. Scans. Yeah. Not owned. All ARC holdings. I'm scanning, by the way. Anybody listening on YouTube, I haven't done my my scans, but we're gonna open this up. And I think I fixed the audio problem. If you guys are still on YouTube and you're hearing, I think I'm the only one watching. Whoever just joined, if YouTube sounds okay, let me know. I think it may be Jesse or someone else. Ooh, Roblox had a cross up, but it's crashing. There's no, there honestly. Jesse, Venmo, look in the description of this. There's a link tree, and I think it says personal Venmo down there. Perfect. It sounds better. I figured out I had a duplicate microphone. Where's my energy index? That's where I really want to look. I think I'm done looking at the S&P because this stuff is just going to wind up down. There are cross-ups going on, but there's no way it's going to wind up good. Yeah. And you can see, I know you can see me scrolling through, look in the upper right. Well, I guess you can't see all the down. You can see my symbols in my brokerage holdings, but the only ones that are up are Pfizer. Ruth Chris is up by 1.9%. What the hell happened to Ruth Chris? Was that a earnings play? Let's see. We're going to go over. There's nothing in the scanner. I'm not even going to bring it up. Ruth Chris up at 1821. Not even an earnings play. Something happened with Ruth Chris. Brokerage, Ruth Chris. I don't need the extra T. So, okay. And by the way, Jesse, since you're watching, I'll show you D-Man. Look at this. I get to switch. And it's a nice switch. It's a smooth switch. Not like yesterday. So I'm finally starting to figure this out. I think. It's a good switch. Okay. I'm going to go into GarageBand and start up the podcast. Good morning. It's Thursday, October 13th. It is CPI day. And before going into that, I will bring up some good news because CPI is bad news. Good news is overnight, I seem to have lost a few tenths of percentage of body fat, and I've lost a couple pounds, not big. But yesterday, ate some salads, ate some fresh greens, stopped drinking the soda, started eating fruits and vegetables more, meat less. I had some tuna, but for the most part, kind of fasted for the most of the day. Ran about, I think, 5 miles, and did some yoga. So I'm not big on weight training right now just because I don't go to the gym. Still kind of in that COVID mode where, listen, before the pandemic, gyms were disgusting. Absolutely disgusting. You people out there are barbarians when it comes to using the gym. Be a good human. Don't sweat all over the equipment and then just walk away. Or better yet, use a dumbbell, wipe your freaking mouth, and then grab the dumbbell and then put the dumbbell back. Whatever. And your towels that you use to wipe off your sweat, disgusting. Wash them. Because I passed by some of these people when I was going to the gym, and it was just disgusting. So don't get me started on that rant. But the good news is, again, I am a believer. My friend John, who was in the band Hawk Nelson, but he was talking about how he has joined a personal trainer, and how he and his wife are on this journey of as they enter their 40s. Getting better so that they're better in life, later in life. I entered my kind of fitness plan when I was 41, and maybe I'll tell that story at some other time, but just to lighten the mood, yeah, I lost some weight overnight. So what happened this morning? Well, essentially, futures shot up. It was about 8 o'clock. There was a news story out of Bloomberg that the British government is about to do a U-turn and reverse their tax cut plan, which was killing the pound, which was strengthening the dollar, which was killing currencies all over the world. And so, boom, this story hits. It runs up all of the futures, and everybody is set. Now, here's what you may not have known. The Biden administration yesterday said, hey, inflation numbers may go up, but we're not seeing the same thing. But, it's dependent. We'll be watching things tomorrow. Well, when you get that kind of message from this administration in particular, you can be certain they knew what this number was going to be. So I didn't put it out because I tend to not participate in conspiracy theories. I tend not to look at a hoping. I'd rather see the facts before I trade, and that's what I would tell you guys is there's always money to be made, but get the facts instead of hoping. There is no reason to hope. A lot of the MACD strategy that I tell you guys, it's not hope. It's based on mathematics. If you're going to get out, follow that MACD strategy and get out. Identify your trades beforehand. But the administration did pull that out. So futures were up when the Bank of England said, hey, the government's going to flinch. They're going to not go through with this tax cut, and they're going to relook at things. So futures went up. Bond yields started to go down. Bond yields in Europe started to go down, which meant, hey, we're going to grow again because the government can, the Bank of England can start tightening and easing and doing whatever they need to do. Again, I don't fully understand this stuff, but I just look at what the futures do as the stories are told. Then what happened was 8:30, the inflation number comes out, and it's hotter than we would have liked. I think it's at an all-time high. Which meant the Fed is going to be more aggressive in tightening, meaning that they're going to be raising their rates. They're going to be selling their asset sheets. By the way, and during this time, Jim Cramer came on and said, who are these people buying? Well, let's rewrite history a little bit, because Cramer's been having his club buying stocks all the way down. So the morons that he's talking about, he's included in that. And the biggest moron is the guy that charges $600 per year for his stock advice that has been completely wrong. And if the inverse Kramer ETF, SGIM and LGIM, I would have bought the SGIM all day long. Anything that you've talked about. DRV is one that is just going to be a monster today. SOXS is going to be a monster today. Any of these short, SPXU is going to be a monster today. essentially, the significant moves in the bond market meant that the equity market is going to take one on the chin. Higher inflation in rents. Nothing in the report indicates that there's going to be a slowdown. There was a 90% chance of a 0.75% rate increase in November. There was a 40% chance of a 0.75% rate hike in December. That 40% went to 80% for a 7.75%. The increase in rates, the Fed fund rate, in 2023, they just raised it up to 4.83%, which is a huge, huge move. I think it was at 4.2%. It's now at 4.9%. That's a big, big move. So what's my guidance for you guys overall? Well, buy the quality companies with good cash flow. And Steve Leisman brought up a great point. This morning, Delta released their earnings. And Ed Bastian, who's their CEO, said, hey, there's no seats available. We're trying to fly more. We just can't fit enough people on the planes. They are charging more for their seats. And Delta's stock went up. You know what? I'm going to show you the transition to Active Trader Pro. Let's go to Active Trader Pro. And we will look at DAL, because I want to show you Delta Airlines stock and we'll look at a 2-day, and it's a 1-minute chart. Let's go to a 5-minute. But you can see DAL, as their earnings were released pre-market, things shot up to $30 immediately at 8:30. This is 8:35. Look at those bars underneath the Bollinger Bands. Well, where's it going to go? It's going to go up. It started to go up. But mind you, these Bollinger Bands are still big. This one's going to come down. It's going to continue to go down. So I do think that Steve Leisman brought up a great point. Demand has not been destroyed. Delta Airlines is telling you demand has not been destroyed. Ticket prices are going up. Pepsi yesterday said they have pricing power. And one of the guys on the after show on CNBC yesterday brought up a great point. He's kind of a fit dude. And he said, hey, sugary drinks and high carb snacks, that's where we think that the American consumer is going to overspend on this. Where else do they have to go? Because that's what the typical American eats to fill their belly. And again, if you don't study nutrition, if you don't understand nutrition, all of those snacks, all of those sugary drinks, they make you feel bloated for less time than fresh fruits and vegetables. If you eat fresh fruits and vegetables, you spend more money, but you are more satisfied at the end of the day for a longer period of time. Therefore, you eat less calories, and your brain isn't craving all of those rushes that you get with the high carb, high sugary drinks. And I say that completely understanding that I need my my corn puffs, I need my Cheetos, I need my Pepsi. So I'm not judging whatsoever, because I'm one of those people. But he brought up a great point. If Pepsi has pricing power, then demand hasn't been destroyed. This today is what will take the S&P down to the 3,200. And let's take a look at SPY. We're going to take a look at SPY so I can show you one of the things. Carter Worth was doing his charting yesterday. We're not in an oversold market yet. Look at the RSI on the SPY. It's at 35. Look at that MACD. It's not about to cross up. And so when you take a look at a longer term, and we go to a weekly. Let's go to a weekly, because that's where the gap was shown. Look at SPY. Down around that 324 price. You're at 356 right now. You have 10% to go down. So I want to tell you, hey, this is a great opportunity to buy. But honestly, the only thing that I would probably buy are the short side, because I do think today's number brings into play 3,200. And when you're at 356 on SPY, let me just look at SPY live. It is at 348. So you're down 8 points. It closed at 356. And let me bring up Active Trader Pro so you can see. There's SPY. That's a 5-minute chart. It's outside the Bollinger Bands, goes back inside the Bollinger Bands, but we're not done moving. We're not done to the downside. I made a note prior to this coming out, by the way. Oh, and I have to block this dude on YouTube. I want to block him, but I don't know how to block him. Best adult dating site. Ignore that. Damn bots. Elon's right. But SPY, I think you buy your SPXU. Let's look at SPXU. I'm going to pull it up here. I was pulling it up on, I have to keep track of where I'm actually streaming to, but SPXU, watch this one shoot up. Boom. Boom, went from 21 to 23. There's your 10% move in a matter of minutes. So SPXU is one of those ones that it's a levered ETF. So it's nice. When you move over here, let's look at the algorithm real quick. You had this buy-in, SPXU, October 11th at $21.95. You're oversold. It's at 63. Am I buying it up here at 23? I don't know. The one that I do want to show you as far as, let's take a look, UVixy. We talked about UVixy at the VIX at 35 wanting to go to back down. Look at this. We're at 12. Yesterday, it kind of floundered. It doesn't have the volatility that it usually does, but now you've got the volatility up. You're going to see a big move in UVixy. From here, I don't know that you see it go to 15, but I do think people are selling. This is what Warren Buffett talks about, the panic. I think 3,200 is that floor on the S&P. So I think you're good. And by the way, I made a note that Jim Cramer last night was on his show talking about 14 stocks that are about to pop. So him talking about selling, the people who are buying are crazy. Well, he was just on last night. Remember, this is the guy who told a caller that Bear Stearns in 2008 was fine. There was no problem with Bear Stearns. The next day, they went bankrupt. The stock was worth zero. So we're not in that situation where stocks are about to go to zero. We are at a place where I do think that stocks will go down to that 3,200 level, but I do think you have to take Warren Buffett's advice. Buy quality companies with products that you like, products that you use, that are at good valuations. So you look at the stock chart and say, okay, do I want to buy here? Am I about to lose 5%? Maybe. But in the long term, if we're in a long recession, you could be down 5-6% for the next year. You could be down 10% for the next year. You could be down 15% for the next year. But if your strategy is to get into these companies, make sure that your lot size is correct so that you can buy on the way down, and make sure that your timeline is correct. There's a lot of us who have put money into this market thinking that we hit a bottom. Well, you can't time it. My parents just bought Apple at, I think, 150. Apple is at 130. Let's see, where's Apple? 134. And it has no sign of actually coming back up. Look at the MACD. The MACD has leveled out. It is the RSI's at 32. This is the algorithm. The algorithm makes you 33% on Apple. Buying and holding only makes you 16%. There's a 41% chance of winning. Your average win is 7%. Apple has become a trading stock in my algorithm. Am I trading it? No. My outlook on this is it's long term. Microsoft is a great example. Microsoft yesterday, by the way, and I'll tie this in, came out with their new Surface tablets. They are using Qualcomm chips. We'll get into that in a little bit, but let's take a look at the stock chart. The stock is down at 32 on the RSI. That MACD ain't coming up anytime soon. You've got earnings coming up October 25th. I have heard from Microsoft employees. This isn't insider information, but I have heard the quarter might be a little rough. It's just news on the street. They don't have any insider information. It just might be a little bit rough. People are pulling back. Look at the ex-dividend date is November 16th. But you do have some catalysts coming up here. And if you have bad news and they bring their earnings in, 219 where the stock is trading today, you could be looking at 200. If we look at a weekly chart of Microsoft, you're pulling up on this 200-day at 216. That would be a support level that I think might bounce off of. Again, I'm not 100% sure, because when you go over to FinViz and you pull up Microsoft, remember that the Microsoft's PE is 23. If they're not growing at the level that that supports a 23 PE, the market's going to automatically pull them back, and you're going to break that support level. Now, when we pull this up here to its recent highs, as far as the volume, you're not seeing any volume at this level. It's broken all of its volume support levels. So you really don't have a lot other than the moving averages to really support you. Now, when I pull it back here to July of 2020, which was the last kind of run up, you do have 212. I'm thinking that 210 to 220 is that support level for Microsoft. So, but like I said, the Surface Pro 9s, they will ditch Intel and AMD chips, and they'll choose Qualcomm chips. Just kind of to make this point, remember, Apple moved to their own chips. Apple owns the software and the hardware. Microsoft, for their Surface tablets, also owns the hardware and the software. So is Microsoft moving to making their own chips? I don't know. Could be. Microsoft may have a chip, for the Xbox, for the Surface tablets. Remember, these guys make a lot of hardware along with their software. So I think Microsoft has an opportunity there. And I do think that the stock is a quality stock. Look at Qualcomm, though. October 4th, you had this 120 buy-in. Then you had that button hook, and you have an immediate downturn. You're at 108. This is a stock that, in my mind, again, they've got to re-sign their contract with Apple. They've just got the Microsoft new stuff. This is a stock that I really, really like, but chips are not in favor. And when chips aren't in favor, what goes up? SOSX. This is a triple levered. I know there's more than a few people in here. In fact, Jesse says thanks on YouTube. Thanks for SOXS. This is huge. You had a buy-in October 20th at $70.89. Today, what are you, 3 days later? 3 days later. I thought this was too late, and I said, guys, be careful. It ain't later. You got your 10% 3 days later. Holy crap. Jesse, if you played options on this one, kudos, high fives. Maybe that's why he's asking me for my Venmo. Again, thanks for the support. In a down market, you can make money in this stuff. It is fantastic. But you do have to trade. Personally, I'm not making any money today whatsoever. In fact, let's see. The only one that was up, and I can't figure out why, is Ruth Chris in my portfolio. And the symbol is RUTH. And it's up, 1.9%. On a day where the SPY is going to be down almost 3%, 2%, 3%, to have Ruth up. Let's see if we can find anything on FinViz. This is how you research stocks, by the way. I don't know. Their PE's at 14. Initiated coverage, overweight. The price target is 22. To announce third quarter earnings on November 4th. On Capital Signal, tricky times ahead for Ruth Hospitality. There's no news. I don't know why it's up 1.4%, but you can see there's a $22 price target from Stevens, overweight. Stock's trading at about 18. Let's go to Active Trader Pro, and we'll pull it up live so you guys can see it. It popped up, I think. Yeah. See, it doesn't have pre-market. The bid and the ask, this just may be pre-market kind of schmooze and crap. Maybe it trades at 18. This one could open up down here at 1738. Who knows? The 10-day volume is at 320,000. The 90-day volume is 353. So you don't have volume in here. Dividend yield is 3.13 by the way. That's why I've held on to it. Super small in my portfolio. I think about $5,000, so it's not much at all. Yesterday, this should have gotten a lot more news, but it didn't. There was a story in the Wall Street Journal that said the Biden administration is negotiating with the Saudis and OPEC on buying enough oil in November, through November and December, to refill the strategic reserves, the emergency strategic reserves. In return, the Saudis will not raise the price of oil before November, or I'm sorry, until December. That gets them through the election. It's as simple as that. Again, remember when I told you there was manipulation in the price of oil by governments around the world? That's what I'm talking about. And it's on several good sources. So that's essentially what I was seeing. And when I talk about the energy complex and why you want to trade in it, because after the election, you can bet after the election, emergency strategic reserves probably will not be used. Also, there will probably be fewer manipulations by world organizations to do that. There was a report last night, unsubstantiated report, that perhaps Putin wants to enter into peace talks with Ukraine, but he's still bombing, still going, producing hell in there. So I thought that was important to bring up. Let's get to some of our requests. Duke Energy, DUK. Jesse asked me about this late yesterday, before the huge downturn. You can see there's even a bigger downturn today. The market just opened, so that's a live red candle right there at 84.09 on Duke Energy. The RSI is at 21. This is crazy. Look at that MACD. I don't know what the news is. This is a energy company that's a utility. During recessions, energy and utility companies usually do well. Its year-to-date performance is down 18%. That's a good thing. The last, this hasn't had anybody look at it since August 5th, and they said outperformed to neutral. Credit Suisse this, but they raised the price target from 112 to 114. Right now, you're trading at 85. The PE, again, is 17. You've got a dividend of 4.68%. The question is that dividend good? Look at the news on this. Third quarter earnings on November 4th. Price down 6.5%. Insiders might find some solace having sold US $3.3 million worth of shares. Gains as the market dips. I mean, there's just not a lot of news. If you want to read news on this one, then that's a good way to do it. But Duke Energy is one that has just been beaten down. It's a utility. It's a regulated electric utility. So they could be forced to be not selling their energy at prices that it costs them more to actually produce the energy, just because of rising costs. It's just a guess. But Duke Energy might be due for a bounce. There is no way I would put money into this one right now. I think if you miss the first 10% of this one, don't be worried. The RSI right now today is at 21. Anything under 20 is considered oversold. But look at the MACD. It still hasn't moved. So I don't think there's any reason to get into this one right now, but add it to your watch list because it does look like it's got an opportunity. You are near your 52-week low. You're at your 52-week low in trading right now, 85.91. Your 52-week high is 116. So it's not a huge volatile stock. It does have some movement in it, but let's look at a daily, and let's go back to pandemic. Let's pull this back to March of 2020 so we can see all of the oh, come on. We're going to have to go to weekly to go back to March of 2020. That's what you want to really look at is, here you go. It was trading at about 60. I think here in the summer of 2020 is probably your support level right now. That's where a lot of stocks are going, by the way. Back to this pandemic kind of trading style. Look at it pre-pandemic. Pre-pandemic, this one was up at 100. So if you want a stock that actually has some support here, Duke Energy might be a good one to get into. Again, look at your beaten down ones. By the way, Ruth Chris opened up down 3%, so it was just a blip. I have Pfizer is the only one that is up 0.14% in my portfolio as we opened up. But Jesse, I think Duke Energy, I think I brought this one up, but I do think Duke Energy is sliding way too hard. Don't get caught in that falling knife. Trade it. I would trade it when there's a bounce. Wait for that MACD to cross up, and I think you'd be good. EQNR, Equinor. I saw this one. Alex is one of the guys on Instagram. He asked about this one. I asked him what he liked about this, and he mentioned it. I just don't have it up in front of me. But EQNR, if you look at this one, they do have a catalyst coming up with some earnings here. But just like everything else, I mean, look at the RSI at 49. I think if you got in at 33 on this one, you probably rode it all the way up to 35. It got the button hook, but the market just took it down. See this gap here between 33 and 34? It's going to fill that. So I think that gap down there at 33, 36, I think you'll see it come down there. Their earnings are coming up October 27th. I just see that MACD crossing down and see that button hook right there. That's where I think EQNR is set to go. But I did see across my the scroll on CNBC this morning. So I do think. Now, there's a Cameco CCJ. They announced they're a uranium. Let me look at what FinViz says they are. CCJ, yeah, they're a uranium play. Produces and sells uranium. It operates two segments, uranium and fuel services. They announced yesterday they will be buying Westinghouse CCJ, which is a nuclear thing, for $8 billion. This one crashed. And when I talk crash, their PE is 193. They did not do well yesterday whatsoever. You can see this enormous gap here from yesterday, from 24 down to 23, and it even fell further to 22. Today, it's trading at 21. Uranium is a huge, the market just does not like spending $8 billion and overpaying for Westinghouse on this one. Their PE is just, again, 193. Year to date, this one is up 2.2% against a market that's down 20%. Hey, they've got room to slide here. Look, I would say this one, if it hits the 20 handle, I think you're looking at a pretty good support there at a 20 handle. Let's look at a monthly because I want to go back. See at 2020, you were here at 8 and 10. So I think that 20 level, there is some support there. But if this one's rolling all the way back to pre-pandemic, you could get really, really hurt on this one. But it came up as just, hey, there's a gap here. It's in the energy space because it's uranium. I thought I'd bring it up. I think it's, pretty good one. AMT, American Tower. This one was brought up by Carter Worth yesterday of Worth Charting. And he said when you look at and we're going to go to a weekly, because when you look at this one, it is back to its pandemic lows at 177, 179. Now, if you don't know AMT, American Tower is, they put up cell phone towers, and what they do is they lease space to the cell phone companies. Their PE is 30. This is a rather expensive stock. They're down in line with the S&P and the NASDAQ at 37%. Their PE is a little bit high. They are at their 52-week lows. I mean, make no doubt about it, this has been beaten down. You got a 3.2% dividend. Any real estate ETF has AMT in it, and it has been one of the pandemic winners. Look at that run up, and look at that run down, and then the run up. And so Carter Worth was like, hey, it's broken through its 200. It is significantly. This is a weekly chart. So just here in September, you're really looking at just this enormous downturn from about 230, 240 down to 178. That's where you're trading right now. So it's an enormous downturn. Could be looking at a bounce. Again, for today, I think DRV is probably your play. Let's look. Jim Cramer says these 14 stocks, Microsoft Surface, future inflation came out by quality companies. This will take for the S&P to get back to 3,200. Oh, just FYI. If you're wondering about money supply, remember we talked about the loan debt being given up. We talked about how interest rates costs to fund the deficit that we have in this country, more money. So essentially you're spending more money to satisfy the debt that you have. And as you spend more money, as you give loan relief and you have less money to spend, it actually costs the government more money just to stay afloat. Well, the Social Security Administration just this morning announced an 8% life increase for Social Security in 2023. This is how the government runs out of money. This is how Social Security runs out of money. Congress will have to take action at some point in time in curbing spending or increasing revenues, one or the other. The Trump administration, whatever political side you are, the Trump administration cut revenues by cutting taxes and increase spending. It's not how you run a good business. Now, they got hit by COVID, which was, unforeseen. But when you do that right before COVID and you don't raise taxes with COVID, but you have, again, the Trump administration did all of the COVID release in the first round. The second round, which was actually controversial, and I was not 100% for, I was semi for, I just didn't like the dollar amount. But the second amount was under Joe Biden, and that was a Democratic push. So they get the blame for that one. But you've increased the government's debt. And that costs money. As the interest rates go up and the Fed increases the interest rate, costs go up. Well, social programs go up too because you have to keep up with inflation. You have to keep up with lifestyle. So Social Security is crazy. And Jim Cramer was on saying people who are buying stocks are dumb. Well, that guy is charging you $600 a year to tell you to buy stocks and then to say, oh, I made a mistake. Yeah, I'm not charging you a thing. I'm giving you stocks that are not making money, but I'm not giving you a thing. Right now, I would say I did some scans. The only one that came up with a cross-up, by the way, is Tilray. And that's the only one I would be actually comfortable in telling you that. And you guys know I hate pot stocks. I hate them. I can't stand them. I don't think that they make money. I don't think they're in any terms going to make money. You can see this candle right here. Let's move in a little closer. That candle right there is when Biden announced, here's the morning candle. Boom, it went up. It went up even further in the afternoon on October 7th. In the afternoon of October 6th, got that. Went up even more on October 7th, crashed right back down. Because, again, the pop business is not where it needs to be. This is the only one with that MACD crossing up, and it still has you in this $2.93 trade. I'd get the hell out of this thing with a nice gain at $3.05. You're not going to make money on this one. It's going back down to probably down to this 260 level. That's where I would say. So when I did scans, I didn't see anything that was worth buying. Now, UPro, if you think that we've hit close to the bottom, let me see. SPX right now is at 3,500. I think you've got 3,200 in the bag. So I don't think you buy UPro right now. There is no MACD crossing up on UPro. This is a triple levered S&P tracker. Look at the MACD. I don't think it's crossing up anytime soon. So I wouldn't buy this one. I wouldn't try and time this one. Your bear on this one is SPXU. And let's look at where, because for the last month, this one has probably been good. You're buying it just, 2 days ago at $21.95. You're $23.61 right now. You've almost made your 10% in just a couple of days. Now, it is oversold, but if you think we're going down to 3,200 and we're going to cover that one, that's where I think you go. You buy this SPXU. You can buy the SQQQ, which has been a crazy, crazy good buy. SPXU, it got you in October 10th at 61.75. You're at 68. You've almost got your 10% in this one. In SQQQ, this is a highly traded stock. It's always on the top 5, 6 that is traded in Fidelity. Now TQQQ, this is one where if we turn around on the NASDAQ, you're going to see it turn around, and it's going to cover a lot of these gaps big. There's a gap here between 20 and 21 and 22. There's a gap here between 28 and 30. There's a gap here at 35. I don't think it's going anytime soon. Your RSI is at 25. There's a gap that was created today, down. So I think you buy. I said yesterday, if you can get it under 17, it had no support to buy it yesterday. None. And I wouldn't buy it the day before huge news. I said I might look at it, just didn't see the support. So I think you're going down to 16. If you get this under at a 15 handle, I think you could play it for a nice bounce back up to 18. Because I do think that we'll see an oversold bounce before we go down to 3,200. So I think you could play this. Don't time it. Wait for it. And when I'm talking about waiting for it, let's go into Active Trader Pro. And we'll go to TQQQ. If you want to scalp, wait till it gets outside of those Bollinger Bands and then has some confirmation. See, it's outside those Bollinger Bands, but it never had confirmation to actually start going up. It is syncing up. Those Bollinger Bands are just too freaking big. Right now, they're just too large. I wouldn't touch this one. I don't think it's going to level off. My guess is it goes down. Again, it's at 1646. It's kind of off its lows, not really off the lows. But look at the 10-day volume, 237 million versus 90-day volume, 175 million. TQQQ is in the realm of making that bounce back up. SARK is going to do great today. Let's see. Do you have your 10% in this one? Because I think this one even turned sooner. 63. You're only at 67, but you'll get there. I think you'll get 10% in that. Bank of America, we talked about yesterday some of the financials. Bank of America is under 30. It's at 29.72. Like I said, I think that's a fairly good price to pay for this one. Their book value is $29.55, and you're trading at $29.36. I got to go back to the browser view. Yeah, sorry. So Bank of America, see how it's kind of hasn't gapped down. There's a gap up here at 31. I think if you can get this under its book value at $29.55, I think that's a good one. Let me see where it's trading at today, the range. $29.31 it got down to at its lows. It actually has some support. This is what I'm talking about with support. And this is a 5-minute chart. See how it goes outside the Bollinger Bands, and then you have support. Here's where you wanted to buy it, $29.30, and you just keep going up. Now, you'll wait. until that kind of loses its confirmation and it trades below this green line, which is the 9-day. When it starts trading below that green line on a full bar, get the hell out. You can get out even sooner. It's free trades now, guys. I mean, you don't have a lot of opportunity to take your profits when you can, even if it's $1. Take your profits because you can always buy in cheaper at this point. One that I noticed that was over 100 was XOM in pre-market, but it lost it. See that button hook right there? It's kind of capitulating, hasn't gotten you out. I don't know that it'll get you out. These earnings are coming up, and I think these earnings are probably going to be fairly good with these energy companies. If not, you've got dividends that are coming up. So, hold on for the dividends. I'm kind of holding on to that one. D-Man, when you say long-term, what is your time outlook? X amount of years. God, D-Man, if I knew that, I would actually be probably a lot richer than I am. Remember how I told you my vast amounts of my wealth have been made on buy and hold, not necessarily trading. If I knew the outlook X number of years, when I'm buying Google, let's talk about Google. When I'm buying Google under 100, it's now at 96. There's going to be a gap here. See that gap between 97 and 96 where it opened up? You're going to have that filled. Is today's candle going to fill that so that you don't have a gap? I don't know. But if there's a gap, you'll get there. And so, here at 96, Google's probably a pretty good buy because in the next 5, 6, 7, 10 years, I think you're going to fill this gap at 109, 110 easily. Let's look at the PE of Google. If you don't think that these companies like Google, and look at the PE of Google, 17. Apple, 22. So, again, what's my time horizon? Years. I'm not talking months, but I'm talking years. If we go into a recession, stream froze on BAC. Sorry. Did it really? Let me see. Oh, yeah. I haven't been on. Didn't switch back over to Active Trader. Yeah. God, why didn't I do that? YouTube Live. It's hard. Yeah. So here's Google, and I hope I was doing it right, but BAC. Yeah. So see Google. See this? I went back to my browser. That gap right there, that's where I'm talking about. Do I think that this one's going back to there? Absolutely. 100%. And you go over here and you look at FinViz, their PE's at 17. 17. They're down 32% year to date. You're at your 52-week low at 96.03. You're trading at 95. I don't think there's any reason that you don't load up on Google here for long term. And if I knew, D-Man, what that time horizon is, unfortunately, I just don't. I'm not Nostradamus. I don't know if we're going into a period. My friend Steve, he always talks about how the lost decade of 2000 and 2010 hurt him. And he was just so against putting money in because of 2010. It's called the lost decade. And let's look at that in the SPY. I think we might have to go monthly. Yeah, we'll have to go monthly. Let's go monthly. And if we look at 2000, here you are at 2000, okay? You're up here at 148. Took you all the way to 2007, and then what happened? The housing crisis. So it took you here to 2011 to actually get back there. Do I think that's what's going to happen? I don't think so, but I don't know. If I knew, I could tell you. But do I think that Google at 17 is going to continue to grow earnings and trade at that 15 to 17 level? I absolutely think they will. Look at their earnings growth. The past 5 years, 30%. Next 5 years, it's only expected to grow by 9%. But again, if they can bring that to 11%, that brings this price up. That brings that PE up. It's expected to grow by 15%. Will they adjust this? I don't know. Maybe. Earnings per share this year, down 8%. That's why you're at 17. It's not considered a growth company anymore. The advertising budgets where Google makes their money have been cut. If we go into a recession, this could trade at a 15 PE. But do I think that the ad spending is going to come back and that Google will lead that? Absolutely 100%. So, D-Man, I can't tell you that buying here at GOOG, because remember, we buy GOOG, not GOGL, because when Google actually buys their stock back, they actually do GOOG. And when companies buy their shares back, they typically, they raise the share price because that earnings per share actually goes up. So, and they've announced buybacks. They've got plenty of cash. Apple has plenty of cash to buy their shares back. There's no problem there. That's why I say buy companies with good cash balances, buy companies that are making money, buy companies that are managed well. Meta's having a problem because Meta's spending all of their money on the metaverse. Would I buy into that one? I bought into it at 300. I thought it was a great company. Still hold that one. Just a horrible, horrible play. But they're making money. So hopefully that makes sense to you guys. Hopefully, again, I don't scare you out of this market. But the reality of the situation is right now, the only thing that makes sense to buy are these short ETFs, SOXL, SPXU, SQQQ, SARK. You want to buy TQQQ when it is under, if you get a 15 handle on that one, I think you could buy it. TQQQ right now is at 1651. It's starting to come back. The other thing I will tell you is every reaction in the market is an overreaction. TQQ has kind of put in some support at the 1640 level, and it's starting to come back. You'll see some bounces. My guess is that we will get back to that 3,200 level on the S&P. I think there's just too many economists that tell me that that's a good level to bounce off of. But again, you could buy, Google at those rates, because you see that gap up there. It's going to get filled, but I can't tell you when. You could be in the lost decade. If Powell, again, if we're in stagflation and 2000 to 2010 comes about, and you have a housing crisis, you have other crisis, nuclear war. Putin doesn't go into a peace talks. Energy is a huge issue. We make some foreign policy mistakes. Who knows where you're going? But I do want you to be careful. And so I still say Apple at these prices probably has more to fall. My guess is when you look at Apple, let's look. Remember that Apple's going to have this gap, and they've got gaps up here as well. At some point, they're going to fill these gaps at 160. Let's go back to a weekly. I'm going to pull it back, Look at the pre-pandemic, 2020. You were at 75. If that's where we're going, it's just too low. Apple has too much cash, too many earnings, and they've taken too many shares off the books to go back to there. This 200-day at 110, I would think that would be a support level, but you've broken this 50-day. Yeah. Every time it's broken that 50-day, it hasn't strayed away from there too much. This is the 2018. Oh, I lost my Active Trader Pro. So I won't be going back there. But see that 2018 back here? This was where the Fed, Yellen, started tightening. Apple got killed. But it came back. Apple got killed during the pandemic, but it came back, touched the 50-day. Apple's getting killed right now. It's just under the 50-day. Went back over. See? March to May, went down, came back. It likes to hover around that 50-day. You can see this 50-day right there. The 50-day right now is at 160. I would say your bottom at this point is probably in the 120s. Again, if it brings it back down to 17, I think that's the 120s. Am I buying this one? I'm not buying just because I have so much of it. Am I selling? Absolutely not, because I'm not going to be able to time that. I think there were a few people that bought Apple in the 140s and they were upset. They sent me a couple messages. Don't worry. Apple, again, this isn't you shouldn't be trading in Apple and buying Apple and Google if this is what you have to pay rent with. This is not something that you take margin out on. This is not something that you invest what you have and you put it in the long term. Just forget about it. Yeah. And D-Man, he says, I might have worded it a bit wrong. Makes total sense. Nothing is going to get me out of the market. I'm hustling and getting my cash flow high to buy in. Yeah. And there was a question to me about 401k. What should I do with my 401k? Should I stop adding to it? I'll give you a real life story. My buddy, who is very conservative, who talks about the lost decade all the time, he actually went to cash in his 401k after the housing crisis and the lost decade. He basically said, I don't trust it, so I'm going to go to cash. He went to cash right about here. I don't think he got back in until about here. Look at that. Again, everything was saying, hey, we're overbought. This run, of the Obama administration can't continue. The 8 fantastic years that we had, it can't continue. And then Trump, everybody was saying, well, it can't continue. We're spending too much. It's too high. And then, the first year of Biden can't continue. It's too high. Well, look at where we're at. And this is just a pullback. And with SPY, you're only at the 50-day. The last time we broke the 50-day, COVID. Time before that was when we started tightening. Time before that was the housing crisis. So that 50-day, it's hanging on there. Do I think that we've got stagflation and we could be back here where you broke the 50-day and you took you 4 years to get it? Yeah, we could be. But the reality is, if you've got a 10-year timeline, add money in. You can't time this thing. Don't go to cash. My parents went to cash during the COVID. And they're afraid to go back into cash because they lost so much in the opportunity cost with COVID. It's a different time. I wouldn't expect you to kind of, be comfortable at this current time. It's not comfortable. Warren Buffett isn't comfortable right now. So I'll leave you with that. It's been 53 minutes. Hopefully you guys got something out of this. I'll be on YouTube Live for a little bit. There's 9 people watching right now. So if you guys have any questions, hit me up on the socials. There's a link below with the link tree. It has all the support stuff. Thanks again to everybody that supports me. I love you guys. Listen to the podcast, Election Insider with Rick Barron. I think I've got an interview coming up with a Vice News reporter on there as well. I'm kind of doing more podcasts with Rick on that one. The Atlanta Journal-Constitution actually contacted us through Rick, and they liked what we talked about. So they liked the podcast. So if you're interested, check it out. Again, I'm a moderate, I would say a moderate liberal, more middle of the aisle. I personally also, if you watch any of the investors that are our representatives in Congress and how they manipulate the market, how they get insider information on some of the committee bills, it's ridiculous. I would love to see reform in that. We talk about a lot of that kind of stuff. Rick has a unique, an absolute unique take on elections. He was the director of elections for Fulton County here in Atlanta, which was key in the 2020 presidential race. he kind of talks about yesterday there was some news reports about voter suppression here in Georgia, where you're able to actually contest and say, hey, this voter isn't eligible. Well, some of the Republicans are actually saying, these voters aren't eligible. Well, sometimes you don't get that letter in the mail, and then you can't vote. That's kind of where they're going with some of this stuff. So Bee Nguyen, who is up for Secretary of State, I'm a big fan of. Her story, her background, I think she's one of the least. There's no dirt on her, no dirt whatsoever. So I do like her. I don't think she has a big chance in the Secretary of State, but I'd love to see an upset. Her and Jen Jordan for Attorney General, love to see an upset. But hey, Jeff, see you on YouTube. So thanks, everybody, for listening. Support the podcast. Check out my Instagram. Check out my and Carlos, who is a designer who wants an opportunity to design some YouTube shorts and do some. He's an animator as well. He's been working with The Street on some of his thestreet.com. If that's the former Kramer stuff, who I respect more than now that Kramer's gone. I like them even more. But he's been working on that. He's kind of, asked me, hey, do I want to do that stuff? Check out the socials, because I'm not good at doing a lot of video stuff. I'm a video editor, not by trade, but for fun. If you guys, some people have found my personal stuff, and you can see kind of my travels, and my personal Instagram is wide open. I'm not closed about that stuff, but it's I do have some video editing. I'm just lazy, and I tell you that guys that over and over again. I'm lazy. So I am off to run 10 miles today. I am off to lose another couple tenths of body fat, couple pounds. Remember how I started the podcast? Positivity, guys. This is just a bump in the road. Don't expect this to be, ongoing. You'll still be fine. You'll still survive. Don't use your money that you're paying rent and food for to invest, and you'll be okay. Again, buy and hold gets you in there. Trading wise, if you're going to trade, I'd say buy those shorts, because I think 3,200 on the S&P is good. So take care, have fun. I will talk to you tomorrow, where I'm hoping we'll have a bounce. I think, again, any reaction in the market is an overreaction, so I would hope that we see a bounce. I'm going to pull up Active Trader Pro again and try and stream a little bit more on YouTube. Take care, guys. Okay. Export song to disk. We'll export that. I can take off my headphones. And by the way, you guys on YouTube, I don't shower before this, so my hair looks a mess. Not my natural color. Do you know much about EVLU? Let me look at EVLU. First, let me pull up Active Trader Pro again. It crashed. And by the way, Jesse, thank you for pointing out that it was stuck on Active Trader Pro. I have my scene titles mixed up, where it says browser view on OBS. It says browser view and Active Trader Pro view, but I have my browser in the Active Trader Pro view and my Active Trader Pro in browser view. So it's a little bit backwards. So thanks for pointing that out. And while this is exporting to disk, let me pull up Active Trader Pro. And boy, Active Trader Pro is just a beast. And D-Man, you'll be fine. Do not trade on margin. Well, I should say, do not invest long-term on margin. I would suggest not trading on margin completely, but you can if you want. That's a lot more risky, especially in this market where you get margin calls, because shit just goes down a lot. But hey, and hit that thumbs up button too while you guys are watching. I'm going to pull up Active Trader Pro. There we go. Let's look at EVLV. EVLV. What's this one? Jesse, man, you got me looking up weird ones. Oh, yeah. Volume size. Look at that. 268,000, 620,000 90-day volume. Jesse, man, you're pulling me into these. EVLV. Evolved Technologies. Oh, it's a SPAC. Forget about it. It ain't making money. You can trade it. See, there's a gap here at 270. You might be able to fill that one. You only need 20 cents to make your 10%. You could trade this one. I don't know anything about it. Let me look at EVLV. I'm taking up a significant amount of my max resources. It's not making money. Price to sales, 10 times price to sales. They have 33 million in sales. They're not making money. They're down 47%. They're reporting at the Credit Suisse Technology Conference. Artificial intelligence-based security screening. Oh, I do this. A touchless security system designed to detect firearms. Yeah. I think I heard of this one. Again, I don't think you bet on this. I think when it becomes a $5 stock and it starts making money, I think you'd be good. But wait till it makes money. You still got warrants out there. EVLVW. As long as you got the warrants out there, don't do it. It hasn't merged. I don't think it's merged. The algorithm loses you 49% versus buying and holding loses you 78%. What are they down? 47% year to date. They're 46% above their 52-week low. Their beta, they don't even have beta score on this. Average true range, 0.15. Volatility, they have a 6% volatility, 7% monthly, 6% weekly. Trade it. It's just a trade stock, Jesse. Yeah, D-Man. I got burned on PayPal too. Here, I'll show you where I bought PayPal. It was a Jim Cramer. I thought he had some insider information from the CEO. This was literally one where he suggested buying PayPal right before earnings because he had a personal talk with the CEO. Now, I'm going to tell you, I think this was the date when I bought PayPal right around February. I think it might have been late January, early February. Let me tell you exactly. I will tell you the exact date that I bought this, but I got burned on PayPal too. You're not the only one. And I think I had a pretty big buy on this one. Oh boy. Guys, today is bad. I just looked at my account. Let's see. All investments. And boy, it's all red. PayPal. Tax lots. I bought it 12/1/21. So I bought it even worse. So I bought it right after this gap, thinking the gap was going to get filled. And see, I was fine. Then I said, the earnings are coming out. Let me see what happened. Got burned again. Said, it's just been beaten up too much. I'm not going to get rid of it. How much do I have? Let's see. PayPal. I am down 60% on this one. My average cost is $190 on PayPal. I have current value. It was a $5,000 buy. So it wasn't huge. But yeah, I got burned on that one too. Let's look at what I want to look at. Ooh, look at TQQQ, by the way. This one got some confirmation. Oh, you know what? I was in that. That's where I wanted to show you PayPal. I was stuck on this one. Sorry, I just get lost here. I'll get better as I learn this. But see, there is December's right here. And so I bought, let's collapse this. Collapse. I bought right here. Right around this earnings saying, it's going to fill this gap. It's going to get it back up there to 219 to 220. Boom, earnings come out, gaps down. It's been beaten up too much. I'm not going to sell it. It's going to get back here to 170. Ooh, look, we have bounce. I get to keep it. Boom. It's just been a ride down. You're not at your bottom. Your bottom is 72 here in July. You're not there. I think 100 is probably where it goes back to as long as it's managed correctly. But here's what I wanted to show you. TQQQ. Remember how I said, it's gaining some positivity? It's trading above the Bollinger Bands, went back within, trading back up there. Any reaction? This was where I was first doing this podcast, I think. Yeah, about 8:40. And I said, the Bollinger Bands are too big. It's got no confirmation. Do not buy it. It was right here at 1660. Well, it continued down, and then we got some positivity. So you're at 17. It reached 1632. That's the bottom. I said if you reached a 15 handle, then get the hell out. Okay, we're going to quit GarageBand. We're going to save that. 58 minutes today on the podcast, by the way. Oof. So, yeah. Yeah. TQQ. Let's look at Sox S. This one's up 4%, so it's lost some of it. Yeah. Market's coming back. Like I said, any reaction in the market is an overreaction. I think you've got a good opportunity to day trade this one to some of the more beaten down names. Let me see. Apple is only down 1%. It's at 136 now. Abbott Labs. This is an interesting one. Let me go back here. It just got you out. But this is one that trades, and when it trades under 100, I think you can buy it. Abbott Labs is a good one. They've got earnings coming out October 18th, so next week. See that volume shelf right there around 100? You're at 99, but it's only 1% up to 100. You got this gap here at 107. I own Abbott Labs, a very small lot in Abbott Labs, but I like it. Oh boy. Let's look at the ARCs. Got you out here. I should have been trading this one the whole time. This is ARC F. This is their financials. So this holds PayPal. This holds Square. Are their two largest positions. So ARC F is getting killed, 4% down. ARC G. Look at that one down. It's a green candle. Again, everything's kind of coming back. Let's see. The Dow is down 164. Remember, this was down almost 600 points. The NASDAQ is down 144. This was down 250. The S&P is at 3545. The VIX is at 32. It's down 2%. Apple's down 1.2%. Amazon's down 3%. Let's look at Amazon. Did anybody shop on Amazon Prime Day? At some point in time, by the way, I want to be able to, for you guys to get involved. I need a platform. I don't know if Twitch allows me to invite people on, but YouTube just seems to be a better place for you guys to find, for people to find me, I should say. Amazon here, this is an interesting one. Look at that roundabout move. All the way from 130 back down to 100. And the slide. Make no bones about it. This is a stock in a negative downslide. Let's see. It's below its 200-day. See the red line? That's the 200-day. It's been providing significant resistance. Does not want to get... Look at that. God, that's almost perfect. See how it... when it actually starts to turn negative... See this, how it crossed the 200-day, and the 200-day starts to become negative. And then the support line, which was the 200-day, while it's a positive moving stock, actually becomes resistance. You can see that. And look at the volume shelves down here. If I pull this back to the last time it was trading at this range, we got to go back even further. Oh, here's what we're going to do. We're going to go to a weekly. Yeah, D-Man, don't use margin. Where's my volume? There we are. Okay, so we're going to pull it back to right here. This is where it was trading last. Now, if we zoom in, ooh, and my stomach's hungry. See the support there at 115? You're at 110. You've got no volume support from the last time it traded back here. Let's pull it back here before, right around that gap. See what a big difference that makes, by the way, because you've got support here at 98, right at the bottom of that Bollinger Band as well. Amazon, I think, again, it's 109. Let's look at the PE on this one. The PE is 101. Price to sales, 2.49. It is down 32% year to date. It is only 7% above its 52-week high of 101. I think that's where you have some support, 100 for Amazon. I like it there. By the way, UVixi has turned even. UVixi is right at the price where it opened up at. It closed. So you were up here and you've started to fall. It's clear we're moving back positive. So any reaction in the market is an overreaction. But that doesn't mean that you're out of the woods. We just may be going back up because people said, hey, there's bargains out here. I'm going to start buying because Europe is going to start easing again, with Britain kind of leading the way. Yeah. Any questions from you guys? Yeah, I just got an indication. Over the last 30 minutes, Occidental Petroleum is outperforming the S&P 500. So let's look at Oxy. You're at 65. It is up 1.29%. Energy is flying again. Remember I said Exxon under 100? It's going towards 100 again. Get it while you can. XLY, consumer discretionary still down. I own a bunch of that one. Let's look at energy favorite Devon. And then I'm going to go post. It's under 70. See the button hook? But it hasn't gotten you out. I think that's a fake out. Let's look at DRV. Look at this trend. Jesus. 47. Let's go back to Active Trader Pro and we'll look at DRV. Because DRV is not heavily traded, I don't think. Close to 1 million shares. Look at that. 10-day volume, 991,000. 90-day volume, 547. This is the hottest stock you can get. 5% are short. God, what a stock. What a call on this one. Let me move back here because I'm going to show you. DRV, this call right here, September 15th to October 15th, just say it's a month, is very similar to the call I made in June. It was actually March, it looks like. Boyle. See that one? In February, I think I may have noticed this one around here in March. I said, Boyle, with natural gas, it's moving. And it was right around 40, around 38, 40. I said, this one could go. Boom. We saw that move. And I even briefed on it. If you go back and listen to my podcast back in April, you'll hear, not that anybody wants to go back, but look at that move down. And I said, ooh, maybe you want to get out. It's got this gap, but I think the gap is going to bring it back up. Boom, 145%. So when you look at Boyle back in that one, and I still say, look at this. Back here in July, where it went from 47 up to 110 again. Look at that. You're at 46 now. Whew. I still like Boyle. I'm not buying it. You know why? Look at that. It's still in at this $53 one. But it's just too kind of crazy. It looks like it's on its way down. And natural gas is one of those. When you look at this one, let's go back to a weekly. Because look at the trend line of the weekly. It's a decaying asset. And so it will continually go down. Only reason you've gone up, and look at the volume in this. There was no volume here before 2019. None whatsoever. Let's bring it back to the highs. See, nobody's hanging on to this one. We'll bring this. Let's see if anybody's still holding it from back here. Nah. Well, ironically, you still have a bunch of people holding it down here in the 20s. But you do have a volume shelf right here at about 43. I think it might bounce off that 43. Do you base your directions on 4-hour chart and use day and week for an outlook? Yes. So, D-Man, I always say trade the trend, and that's kind of a standard of, any trader. Momentum traders, they trade the trend. Chart or technical traders, they trade the trend. Fundamentals, they trade the trend. If you're seeing a downward movement in a stock, that trend is going to take that stock down. If you're seeing an upward movement in a stock, you're going to, most likely the trend will take that stock up. Again, there's catalysts in their news. Devin, by the way, is negative now. But there's catalysts in their news. And so they all combine to actually make that trend. A reversal in trend is where, I talk about falling knives. Don't get involved with a falling knife. Well, look at this one. This one's a falling knife. So that 200-day, that red, is kind of an industry standard as to, okay, let's find the trend. When I look at a weekly on this one, you can see that trend. When I look at a daily on this one, see how the trend's now up? So your trend is your friend, but you have to identify where you're actually, what your timeline is before you enter this. Say, for instance, you're going to buy, you're in the market for a new laptop. Well, Apple's laptops are about $1,000, $1,200 for a low end. A low end PC is about $200 to $300. Well, what's your outlook on a $1,000 MacBook Pro? Because I can tell you, I bought my MacBook Pro in 2015 that I hate because it's too slow. I can't stream on YouTube and do my podcast like I can on this 2017 iMac that I have at my house. But my outlook when I bought that laptop for $1,000 was 5 years. And I said, if I buy a PC, I'm going to need to replace that probably 3 years from now because it's going to be outdated and it can't support the programs that are coming out for it. Meanwhile, Apple has support and they say their laptops will last you 5 years. Look at a 5-year-old iPhone. I had the XS up until September. That was a 3-year-old iPhone. I think my parents still have the 7s. They're perfectly happy. But there's 5 years on that. You want to, even in your everyday life, when you look at Outlook, you're going to spend $1,000 on a laptop. If you're going to spend $1,000 on a stock, in my mind, put a 5-year timeline on that. Look at that in 5 years and trade that trend. That's why I go from monthly to weekly to daily. And then 4 hours, the reason I use a 4-hour, if we were to look at this boil right here, see how it's a downward trend right here, and that 50-day has not quite crossed the 200-day? The 50-day crossing the 200-day is what's called the death cross. And typically that's a bearish signal that you still have more to fall. Well, if I go to a 4-hour, I'm just going to run my algorithm on this. You're in on this one. Look at that 50-day. It already crossed here September 27th. And then the next couple of days, the MACD crosses up and you get a buy. The reason I use the 4-hour on my charts is, I'm lazy and I don't want to sit in front of charts all day. So when I wrote the algorithm, I said, I really want a 4-hour where I can do things during the day and just get alerts 2 times a day. Because I was watching 1, 5, and 10-minute charts, and I was, trading on that kind of realm. And it's a different story. If I go to Active Trader Pro and I look at 5-minute and 1-minute charts, it's going to be a different trend. But I was trading on that realm. But Boyle's a perfect example. Look at your trends and identify your timeline. And if your timeline is positive, trade the trend on the timeline. SPXU. Let's look at that one. Maybe I should do DRV. But SPXU is a great one. Look at this 4-hour timeline. You've got this one moving up. You had a buy here at 21.95, and it's moved all the way up to 23. If I move this to a daily, you're not quite, as positive as you were. See the gaps? This gap down here at 20, I'm kind of worried about that one on the daily. I think that provides a pretty good support. The Bollinger Bands are up there. This one's still moving up, but it's a red candle. It's down. It's opened up higher than it is down. So that's kind of, when I look at these charts and I look at this stuff, that's kind of where I'm going. I can't tell you absolutely 100%, hey, this is a time to get in. But you put all of these things together, and Google's a perfect example. Like I said in the podcast, Google's a perfect example. You are out here on the 4-hour timeline. And there's no real reason to get back in right now because that MACD is crossing down. You may miss the first 10% of that move. This actual algorithm move, you may lose 4 or 5%. But in 5 years, am I certain that this is going to be above $100 again? Yeah. And I'm willing to put my cash in there to actually live with that 100. It might be $300. Remember, this did a huge split, way back in, I forget when. But you're seeing stuff move down now. A perfect example, I'll tell you. One that I identified as a long-term buy and hold is PanW. And I bought this one way back here. I'll tell you exactly the date that I bought this at. PanW. Let's look at tax lots. I bought this one $222.22. So it was right back here. And my average price is $159 a share. It's at $152. Now, I haven't sold this one. It went all the way up here to 206, way back down, came back down. Probably should have sold this. I identified this as a long-term hold. They're the leaders in cybersecurity. Look at how oversold this one is. But am I buying again? I may add to it, but I won't add to it until that MACD starts to make a positive movement. And I can tell you, when you look at this one, that's a 4-hour chart. Let's look at the daily. Because the daily, where's that 200-day? Let's move in a little bit. See that blue line right there? That's the 50-day. You had this death cross here, which again is a bearish signal, which I probably should have sold on June 23rd when it was at 175. And daily-wise, it's now moved up in an upward direction. Now, when the 50-day crosses up, that's a bullish signal. And I thought it was going to cross up here October 6th when it was still at 175. We've seen nothing but a crash since then. And so this is one where I'm willing to hold it. It's outside the Bollinger Bands. My guess is this one moves back up. Again, it's super expensive. It's oversold. I like this one. Cybersecurity has been beaten up, but here's the thing. Go over to Finviz, PanW, Palo Alto Networks. They're not making money. Their forward PE is 40. They hope to make money at some point. Their earnings per share this year, up 50%. Their earnings per share over the next 5 years, up 25%. Again, this is one, it's down only 16%. It is actually beating the S&P, but it's based on a growth. And you guys hear a lot of talk of value versus growth. Google value versus growth stocks, and you'll find a great Investopedia explanation of it. It's trading below the S&P value. But PanW is down 2%. My guess is, this 148 gap, that gets filled. Let's see. I'm not going to switch it, but PanW. DRV's taken off, by the way, again. PanW today, it went to 148.01. Did it cover that gap? Yeah. Covered this gap. So I would expect this one to pop back up. And again, I may just add more PanW to my portfolio just based on this observation. But I do think that SPY scares the fuck out of me, and that it's going back down to 3,200. And this one's expensive. Make no bones about it. Do you have any HBI? And if not, why? What is HBI? I don't even know what HBI is. Hanes, no. You know why? And this is kind of a, maybe TMI. I tried their boxer briefs, Jesse. They're horrible. I don't even buy their T-shirts. I buy my T-shirts at Target, and I think it's Goodfellows or something. They're like house brand. It's way better than Hanes. I don't like Hanes. The reason I just don't have it is I just don't like it. But you had a buy-in here at $7.51 on October 4th. You're at $7.54. You've had your button hook here. Let's see. HBI. Again, my biggest advice is buy stocks and products that you use. They're down 54% this year. Their PE is 6. Let's look at Ralph Lauren. RL. I do like their underwear. They're at 12. They're down 22% this year, but they have a 3.24% dividend. HBI, do they have a dividend? 7.82. Wow, that's enticing, Jesse. 6 PE, earnings per share over the next 5 years down 6%. That's the estimate. Earnings per share this year is up 832%. You're trading back to where you were trading in pandemic. Got to be honest, Jesse, this one's enticing. Yeah. D-man, do not take a margin call and go into HBI. Their boxer briefs suck. I like this one, though. So here, the algorithm loses you 38% on this. Buying and holding loses you 55%. That's over 1,000 candles, so it's 500 trading days. You have 34 total positions. You win 21% of the time. Your average win is 7.67. So here's my caveat to this. Yes, it's beaten down. Yes, it's cheap. It's got a very good dividend to hold on to if you want to. It is similar to Apple from the algorithm perspective, other than you're actually losing money on both the algorithm and the buy and hold. That's my caveat. Which company would you rather hold in your portfolio during a quote-unquote downturn? Apple, that can buy a ton of stock back because they have a ton of cash. A company that is not getting bought out or going under, declaring bankruptcy. Hanes brand probably isn't declaring bankruptcy, but they're in the fashion business. And again, when I say I hate their boxer briefs, I don't buy any of it. I think I do have some. I did have some Hanes brand socks. Look at the last downgrade. So the downgrades in June were from Stifel, Barclays, and Evercore. The average price target was taken down to 13. That was in June. Turned down at 7. Let me see what the news says. Hanes brand teams up with the University of California. Even their sweatshirts. I mean, look at their sweatshirts. I was in, where was I yesterday? Walmart. And they had some Russell Athletic sweatshirts. They were pretty nice. I got to tell you, they were fluffy. The second you put those things in the wash, man, they're pilling up. And Hanes is kind of like that. I just don't think it's a quality brand. I don't think they use quality products. I think they're just a cheap brand. But in a recession, man, you're going into Walmart. What are you buying? Your Ralph Lauren boxers for $25 a pop, or the value pack with six Hanes brand boxer briefs. I can tell you, here's a real life story. So I was in Minneapolis working for MLS at the All-Star game. And I had just come from Los Angeles, SoFi Stadium, working for MLS. And I think I was gone for 14 days. Now, obviously, I don't have 14 pairs of freaking underwear that I put into a bag when I go on these trips. So I had to do a laundry. Well, I just so happened to get to the hotel on Saturday. Their laundry, they told me Saturday night they would do the laundry. Saturday night, they didn't do the laundry. They wound up losing my entire, all my underwear. I was working, I think if you guys remember, if you were listening, I was working 14 to 18 hour days. That to me, it was too much for me. So in the 14 to 16 hour days, I couldn't find time. I found a Target that was open 24 hours. I went in there. I looked at Hanes brand as getting just one of those value packs. But you know what? I said, for $2 more, I can get Fruit of the Loom. And I felt the fabric. Now, the Fruit of the Loom was a little bit less fabric. It had some perforation, so there was quote-unquote breathability in it. I bought the Fruit of the Loom. For $2 more, I got the same amount of underwear, better quality, better stitching. I knew it wasn't going to be quote-unquote rough on me because it wasn't, that fabric. $25.50. So those are my thoughts, Jesse. I think you're right. I think this could be a mover. But look, you've thought that probably since you were up here at 10. It's too cheap. You got this gap up here at 11. Could move down. Just look at we'll look at a daily. Has it crossed? That 50 days still negative. Nothing's moved. You had a MACD cross up here on October 4th, which the algorithm got you in it. You've got their earnings coming out on November 3rd. Are they increasing their earnings? Doesn't look like it. Look at this. 53, 44, 34, 28. What makes you think this one's going to go back up to 44 when they were trading up here at 15? I don't think that's possible. Increased cost. So go to a weekly. By the way, my stomach is pumping. I am hungry. But I am going to go for my run. Now look at that weekly. I like your thoughts, Jesse. It's trading outside the Bollinger Bands here, so it's got to come back in. But God, you just had the death cross here on the weekly. Yeah. I think you're right. I'd still say you got some movement downwards. 25, 50, 100, 200, MA or EMA, and do you use 9-day in there too for a quicker trend line? So I'll move. Let me take you to, let's look at Apple. Apple's a good one. So here's the 4 hour. And so I'll expand this so we can see it. The blue line is a 50-day SMA. So this blue line that's right here, that's a 50-day SMA. The red line is a 200 SMA. Now, when you get to shorter term, remember the difference is simple moving average reacts a little slower than an enhanced exponential moving average. So EMAs move a little bit quicker. So as you get to those 9 and 21 day, that's what this is. So the green is a 9-day EMA. The yellow is a 21-day EMA. Don't expect me to tell you the difference. Go to Investopedia.com to look at EMA versus SMA. You can find out the benefits of each. When I wrote this algorithm, it made sense for me from a chart perspective to look at shorter-term EMAs, longer-term SMAs. And between those two is where I determine, okay, let's look at that. Now, in my algorithm, if you guys signed up for TrendSpider, and there's links to sign up for TrendSpider below, and I'll share my algorithm with you if you sign up, and I do get a monthly as long as you sign up. And by the way, the Black Friday sale is coming up in November for the yearly one. I think I pay, I want to say, you have to get the middle tier, which is the elite, but I think it's around $300 a year or something. And if you can't make $300 a year in trading, get the F out and just buy yourself a VOO and just let that one ride. But if you can't make $300 a year in trading to pay that back, and you get to write it off on your taxes because it's a professional expense. But the reason I did this is because, again, it moved when I wrote this algorithm. The EMAs work in the algorithm on the sell side. It does not work on the buy side because it keeps you out of a lot of things, but it does work on the sell side. So Apple in particular, you can see We're kind of gapping down here between 136. If it doesn't cross 138 in the morning, you're going to have a gap there. Probably fill it up on the way up. So, since 10 a.m., Jesse, let's see. I'll move it back to Active Trader Pro. Let's look at take your profits, man. You down a little. This is a 1 minute chart. Let's see if it's got any. This is SQQQ, by the way. See how it traded outside the Bollinger Band right there at 1042? I would expect it to trade up, but it's not above the 9-day. And this is, by the way, this is a yellow, is the 20-day EMA. I should make that a 21. You know what? I'm going to edit that one because I want a 21. Modify. 21. Apply. Doesn't move it that much. So the difference is, so here's why I use 9 and 21. 9 is under 2 weeks trading days. So you've only got 5 trading days in a week without a holiday, and 9 gets you under 2 weeks because it's under 10. 21 gets you over 3 weeks because that's essentially, over 4 weeks. So it's just over a month. So that's why I use those two. And they're both EMAs because they're short term. Now the red line here is a 200-day. And this one right here is your VWAP, volume weighted average price. I do not have a 50-day on my Active Trader Pro. I just don't. But Jesse, you're kind of not trading the trend here. Trend's moving down. That 9 and the 21 are moving down. But it's a 5-minute chart. I think you're right in the long term, by the way, Jesse. And I would not, even if you're down today, say you bought SQQQ at $66. You're up 54 cents. I think you're good holding on to that until the S&P hits 3,200. And remember, the S&P, it's not like the NASDAQ is going to go way up and the S&P is going to go way down. These are going to trade, all those indices are going to trade in the same range. So, any other questions before I go post this podcast and run? Hey, by the way, do you guys, question for everybody, and I hope everybody that's listening has hit the like button, but do you guys watch the YouTube and then listen to the podcast? The only reason I started YouTube was because people couldn't see the charts, but my guess is you don't. Wow, you know what? As of September 30th, there was 20%, 17.55% short interest in SQQQ. Why would you short SQQQ and just not buy TQQQ? Listen, there's smarter people out there than me. I'm going to rename these. Rename. Active Trader Pro. And then we'll rename this to Safari. Rename. Safari View. Sorry. I had to do that so I can save this. There we go. Sorry with the podcast now stream every morning. Oh, you started shorting HBI at 10. Oh, perfect. I like that one. Jesse, man, be careful with shorts. I'm conservative. I'm a boomer. Shorting. My mom was asking me about shorting. Now, mind you, my mom is 70-something. Probably not the most educated trader. Buy and hold has been their strategy. In fact, my dad still yells at me that Netflix, every time Netflix is up, he yells, "Oh my God, I'm making so much money." Well, what'd you buy it at, Dad? Because he's not making that much money. Let's see. Did Netflix come around here? Because I said buy it yesterday up here at 220, right before earnings. Will you have an opportunity to buy Netflix? Look at that, MACD. I don't know if you're going to have an opportunity to buy this. Oh, God, that's ugly. Jesse, you're an edibles guy who plays poker and short stock. High five, man. I'm a fan. Yeah, Spotify. I'm trying to help Rick with his podcast. The Election Insider podcast that I do with Rick. Again, there was an AJC reporter that reached out to him yesterday and said, I like the banter between you and Gary because you guys present both sides. And I think there was a Trumper that actually wrote to Rick. One of the things we're going to do is Rick, if you just Google Richard Barron on YouTube, you'll see some great Vice news stories about how a lot of these Trumpers have threatened him and his life. And the poor guy, he's driving Uber now. He's blackballed on a lot of jobs, even jobs that he's overqualified for, can't get. So he's driving Uber to kind of support himself. He's not in my position. He is a trader and understands trading, but just doesn't have the capital to actually do it. So he needs to support his daughter, and his daughter, there were death threats against him and his daughter from a lot of these Trumpers. And one of the things we want to do with this podcast is actually confront those people. And there's a Vice News, a great video, where a Vice News reporter actually calls the people who threatened him and said, why did you threaten him? What did he do? And so there's one that actually lives close by, and at some point would like him to come on the podcast and just kind of explain to us what his thought process was. Does he still want to kill Rick? Does he actually believe that there was some type of diabolical plot to change election results? Because I can tell you, as a personal friend of Rick's, there's nothing. And a lot of the things that he brings up, I know nothing about elections, the inside workings of elections. He's been in Ukraine for the elections with Zelensky. He's been in special elections with the state of Texas. He's got such a background and such a unique voice and experience in looking at it. He's not a fan of the Republicans or the Democrats. They're both, both sides have their own games that they play. And that's kind of what we talk about on the podcast. But this AJC reporter called him and said, hey, I'm a fan of this one. And Friday, I think tomorrow, we're having the one of the Vice News reporters on to kind of just talk and chit-chat. I do enough talking on my own podcast by myself, so I figured I'd start joining other podcasts with other people. But I need to invite other traders on my podcast so we can start looking at stuff and doing a little interactivity. But hey, thanks you guys for hanging in here with me, for watching. I'm going to go. It's 10:51. I'm going to go post this. Take me about probably 20 minutes to post this thing. I will talk to you guys tomorrow. I do think that the market's going to rebound. Let's take a look. I'll show you. Look at S. This is SQQQ. See how it's going down? TQQQ, I said if you can get it in the 15 handle, great. I don't think you'll get the 15 handle today. You were close. The low was 1632. 16 handle was where to get it. But I don't think we're staying up there. I think you're going down. Again, the market's down. Dow's down 123. NASDAQ's down 171. S&P's down 34. S&P's at 3542. You've broken the June lows. So I think we're on our way down. Okay, guys. Tomorrow will be even better on YouTube. I promise. I'm getting there. And then, ironically, I got to go work the finals, and then I'm going to be up in New Jersey. I'm not going to take my whole setup up to New Jersey. That would be crazy to bring this up there to New Jersey. Maybe I'll just buy a new laptop. But I do think the RAM in this laptop, Jesse, you're right. I got to put OBS on an SSD that's off the computer. But I think the reality of it is the RAM in this iMac. I was able to upgrade the RAM. I've got 40 gigs of RAM on this iMac, and I think that's what's allowing me to use GarageBand, OBS, Active Trader Pro, and Notes, and Safari. So, but it might be the chip, and maybe if I get an M1 or an M2, it might be, a good enough chip. This one, let's see. I will tell you about this Mac. This is a iMac, 27-inch, 2017, 3.4 gigahertz quad-core Intel Core i5. So even though I hate Intel, I've got an Intel chip. 40 gigs of 2400 megahertz DDR4, startup disk graphics, Radeon Pro 574 gigabytes. So I've only got this one display. Memory is 4 gigs, 16 gigs, and 16 gigs. Resources, it's not taking up much. So there's my about the Mac. Okay, see you guys tomorrow. Take care. Let me know if you win. And again, hit the support link down below. Jesse, you owe me. Don't worry about it, though. Honestly, I don't need the money. Just if you make some money. When you're done shorting Hanes brand and it goes down to 5, Jesse, that's when you can